Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. Alright, this disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize all investments carry risk. There's no guarantee of profit. Okay, so first one I want to talk about today is Goldman Sachs. Now, I like Goldman Sachs here a lot. A lot of these financials have sold off aggressively here with rising interest rates. And I believe financials have really sold off here because the spread between the 10 and the 2-year Treasury note, which is how banks make their money, has tightened considerably and even inverted, which is a sign of a recession 12, 16, 24 months down the road. But that's a conversation for a different day. So we're seeing here on these April 14th 3:30 calls, Goldman Sachs. People are coming in and buying these calls. Last week, I saw the same activity here. They were coming in and buying, I think, the 3:15 call that expired last Friday. They were buying those late in the week. And what do you know? Goldman Sachs is above 3:15. I think it was even at 3:25 at one point last week. So those calls were profitable. I'm seeing the same type of trading action going on here. 8,600 of these calls are trading. Open interest of about 2,100. I like that ratio there. Saw some nice buys down in the time of sales. I like Goldman Sachs here. I have a stock position in Goldman Sachs. I added to my stock position last week when they were buying calls around the 310 level. Now the stock's at 320, so we have a good gain on the shares that we bought there. Unfortunately, we still have a loss because I started accumulating shares a little bit earlier. But I like Goldman Sachs here. All of the negatives for the banks are kind of known at this point because the spread between 10 and 2-year Treasury and also Goldman Sachs and Morgan Stanley are big in the capital markets. We know there's been a big decline there with SPACs and IPOs and listings. The IPO market is pretty much closed. So I do not have calls in Goldman Sachs. I actually bought some calls in Bank of America today, some longer day 2023 calls because I'm bullish on the banks. We have earnings coming up. That is a catalyst. Usually banks run into the earnings and they sell off after the earnings, but look at how much these stocks are down here. Pretty significantly above the pre-pandemic high here, but we don't really care where stock has been. We just care about where it's going. You can see here we might have some resistance at some of these moving averages here, but Goldman Sachs sells for about 1 times book. Some of these other banks sold for, not that long ago, sold for about 2 times book. I think that Goldman Sachs here is going to bounce at 1 times book. People pay a premium for their advice, for their financial services and such. I like Goldman Sachs. All right, next one I want to bring up is ChargePoint. Now, this is a little bit of a riskier one here. I actually shorted some puts here. You can tell there was a massive amount of calls trading here of these this week expiry, April 14th, 18 strike calls with the stock closing at about 1650. Somebody is expecting this stock to make a move at to near or above $18 on expiration, or make a big move tomorrow or the next day so they can take it off or ride out till expiration and have it be above $18 a share. What I saw was the implied volatility spiked up so much after these people started coming in and buying these calls. Obviously, I saw this trade after quite significant amount of time after. So these calls were way more expensive than what they paid. So what I decided, the implied volatility shot way up here. So what I decided to do, I was even thinking about going out and buying the stock. And I was like, you know what? I'm just going to short some puts instead. So that is pretty risky, some people would say, going out and shorting a naked put. But, I was considering buying the stock at about 1650 because I didn't want to buy the calls. The implied volatility ran way too high. I did not want to pay that high premium there. So I went out, I shorted some puts. That makes me liable to buy the stock at 1650 if it's below the strike on expiration. Obviously, if the stock declines, I can close out the short put. I can buy the put back at a loss. So say I sold to open the puts at 50 cents. The puts are at $1.50. I don't want to, turns out I actually don't want to buy the stock. I can close those puts out for a loss, so sell them for 50 cents, buy them back for $1.50. That would be a pretty miserable trade, but that has happened. Quite honestly, I don't think that shorting puts is too risky if you're willing to go out and buy the stock because you're collecting a premium. You're collecting that 50 cents up front for pretty much saying that you will buy the stock, and if the stock makes a nice move higher, then we can buy the puts back for significantly cheaper. That's how shorting works. You sell something and look to buy it back cheaper. So, obviously, if you don't know what shorting is, I would not recommend that trading strategy. So, I like this chart here is definitely in a little bit of a downtrend. I think it's kind of getting a little bit overdone to the downside. Obviously, I would rather get in around this 11 level here. I think that the chart, we're kind of following this trend line here. So, it's a little risky to kind of just hop into a trade here. But I really like this activity here. You can see, you can just draw pretty much a straight line here. Right at the 200-day, we failed at this downtrend line that I'm drawing with my cursor. Obviously, just a not a very accurate line drawn. I'm not going to draw a line out, but just an idea of what that trend line looks. Although we did hold the 50-day here, and you can see, yep, we held the 50-day right here, came to it and bounced off it perfectly. I do like that charge point was kind of rallying towards the end of the day, actually, while the rest of the market was declining significantly. The S&P was down about around 2%, so charge point was down about 1.5%. Actually outperformed the market today. I think if we have somewhat of a down to up market tomorrow, I think charge point will definitely have a nice rally back to the 18 level. Then we will be looking to take some profits. So thanks for everyone who's been subscribing. Make sure to subscribe if you have not. Make sure to smash the like button so I know to keep making more videos like this. Make sure to leave a comment down below if you got any questions. Thanks for the support, everyone. Make sure to subscribe. We'll see you in the next one.